All right, it looks like we're at time, so let's go ahead and get started with the webcast today. My name is Dimitri, and I'm with NACB and the Consultants Training Institute. Before we get started with the round of evaluation today, I just want to go over a few housekeeping items. First, there's our disclaimer. And first, to obtain CB credit, you must answer all the poll questions that pop up on your screen during the webcast today. If you have an ABW subscription, the CP certificate will be available to you in your nacb.com portal within 7 to 10 business days after today's session. If you have any questions during the webcast today, please also use the chat features. Those will be directed to us, and we'll be happy to address those questions for you. Um, with ABW and ABW International, we try to cover all the hot topics in the industry. Within the 2 hours that we have, we can't cover all the information that's out there. So we do have links to several resources so you can stay updated in the industry. And with that, I'm going to turn the time over to Alina, who will get us started with the presentation today.
Thank you, Shanda, and welcome everyone to our February show. I hope you are having a wonderful start of your week. And today, our lineup is very interesting. We are going to have Janae with the industry headlines as every month. And David is going to be talking to us about data-driven peer group benchmarking. So very interesting topic. After that, we are going to have our newest dad, Dimitri Yimga, is going to be interviewing Mark Hand and David Harkins, and they are going to be talking about getting personal with personal goodwill. And after that, Mel and I, we are going to be discussing with the judges when a mistake stops being a mistake, you know how things go. And Mr. Ken Pummel is going to be discussing standards updates and how things are going with NACBA standard boards. And at the end, we are going to have Ed Moffrat. He's going to be interviewing Sarah and Greg, and they are going to be talking about launching your own business valuation practice and the things that the do's and don't for when you are starting. So right now, I'm going to leave Janae, that she's going to take it from here with the industry updates. Janae, great having you.
Thanks so much. Thanks, Alina. Yep, we're going to do our industry updates and talk about what is going on around the valuation world in the news. All right. So our first articles are how volatile interest rates affect the cost of capital and company valuations, which appeared in the Willamette Perspectives. Twists and turns and a huge forensic accounting trial. Interview of T. Boone Pickens, trial attorney. Estimating SME's optimal capital structure using Demoter and synthetic rating, and how to model correlated random variables in the context of Monte Carlo simulations in Python, which both appeared in the European Business Valuation magazine. The BVRP draft on competent business appraisers raises questions, appearing in the Business Valuation Update from February, just released. And then comments wanted on AICPA stock valuation guide from BV Wire. ASB board explains proposed AO41 on tech use. Comments wanted, also from BV Wire. And then finally, the case for out-of-court wind downs from the quick read in January 14th. Okay, so what I hope for you to get out of our presentation today is KPMG's 2025 survey confirms widespread impact of the Fed's monetary policy. T. Boone Pickens' last trial provides insight for litigation support engagements. There's a lot in there for you to pick up and learn from. The current issue of EBVM has content you didn't know you needed to know. The Appraisal Foundation released an exposure draft that may make you groan. Here we go again. The AICPA is seeking comments on a working draft of its cheap stock guide, and the Appraisal Foundation hosted a webinar to discuss and hopefully clarify proposed AO41. Finally, out-of-court wind downs are gaining traction and offer benefits for the bankruptcy process. So the risk-free rate article discussed how normalization still remains controversial in our industry. There were some interesting thoughts in there. The cost of debt should reflect market rates rather than historical, maybe the historical rate that the company is borrowing at, which may be lower than market. So the risk-free rate and cost of debt have increased materially, which has depressed valuations even when cash flows remain consistent. What do we do about that in our valuations, and how does this carry strategic implications for the timing of the valuation date? All things to consider. There were a lot of good notes and things that you should be aware of, and maybe some things to think about as you're drafting your valuation reports, considering risk-free rate, cost of debt, and the overall values, especially if you've got valuations that are going across time, say maybe ESOP valuations. So some interesting takeaways, including KPMG survey, the 2025 survey showing the overall WACC for medium to large companies had increased from 6.6% to 8.5% over the 2020 to 2025 period, which confirmed the widespread impact across market segments. All right, another interesting article. This was a long article. There was a lot to take away from it if you're looking at litigation support. So if you are someone that maybe hasn't had a lot of experience, this is probably a good place for you to start. Uh-oh, are my slides not sharing? 1 second.
We can see them.
Your slides are sharing.
Okay.
We can see them. You're
Yes.
fine.
Okay, good. Okay, good. There was a message. Sorry. All right. So simplification and visual communication wins over juries. This was a takeaway from this trial. There was an engineering expert who had very complex things to explain. He used marbles and sand in jars to show oil trapped in shale pores, pouring blue liquid over them to simulate oil saturation. He had stacked in another demonstration, he stacked clay pigeons, skeet pigeons, to represent 10 oil bench layers under the formation that was at issue, and compared stack heights to represent other famous formations to give the jury an idea or a picture in their minds about what was happening. He set up these science projects on tables in front of the jury box, and then it was able to make these complex reservoir engineering concepts accessible to laypersons. And we're not doing reservoir engineering, but we are sometimes looking at complex financial and economic theories and concepts. So consider how visual communication may work, and absolutely at least simplification. There was another expert who had 20 plus binders of calculations visible around the witness stand, but despite the massive complexity, he kept his testimony as short as possible, remarkably short. And he was able to recognize jury fatigue. He was connected with his audience or the jury to recognize how fatigued they were becoming after 4 weeks in the jury box. So know your audience, know the jury's attention span and sophistication level, and don't over-explain once you've won the point. This was another takeaway from this trial. The other side's documents can also save your testimony or make your case. The defense had argued that horizontal drilling wasn't known to them at the dates of valuation. They tried to limit testimony based on a lack of knowledge at those dates. But this side, T. Boone Pickens' side, was able to show a thumb drive that was provided in discovery that showed maps of 500 planned horizontal wells at this time. So make sure that you are really pouring through all the documents available, especially the other side's documents, because man, if you can show it using their own evidence, it goes a long way to the credibility of what you're presenting. Their own records can sometimes be your most powerful evidence and can overcome methodological challenges to your testimony. Another interesting note was on professional appearance. The article passed along some advice for women, perhaps. So this was interesting. Not anything that maybe I'm not already somewhat familiar with, but if you're new to this, definitely take a look. If you're curious, take a look. So know your audience was a takeaway from this, and perhaps make changes based on the venue that you're in. There was a particular anecdote about leaving an Audi at the hotel because it may appear conspicuously out of place, right? Considering jewelry, considering the the clothing, everything. So it's interesting, and it might be helpful if you're wondering, okay, how do I present myself to be most effective in the courtroom? Testifying experts must be flexible and handle judicial constraints professionally. So build flexibility into your work product and maintain detailed calculations for your support so that you can pivot rapidly if necessary. Despite enormous frustration and perplexing judicial rulings in this case, one of the experts made recalculations overnight for his whole entire testimony, and testified professionally, kept his presentation brief, and didn't argue with the constraints. The jury ended up awarding every dollar the experts and the T. Boone Pickens side was permitted to seek by the judge. You can't control the judicial rulings. So when you're constrained, recalculate, adapt your testimony and present the strongest case possible within any limitations imposed. Fighting the judge in front of the jury could, impair your credibility. Appearing, combative is probably not the best look. So this case had a lot to take away. Those are some of the highlights from it. Interesting read, good read. The EBVM's goal is to serve as a platform for discussing practical issues in business valuation. Articles tend to read like white papers. The magazine is obviously geared towards Europe, being the European Business Valuation magazine. Articles in the current issue of the EBVM are still very relevant. They can be relevant or interesting, give you new thoughts, new ideas. Some of these articles included how to model correlated random variables in the context of Monte Carlo simulations in Python. Okay, if you're interested in learning a little bit of Python code, which is included already in current versions of Excel, and exploring ways to model correlated variables, this may be the advanced article for you. If nothing else, you'll leave knowing what a copula is. Another article discussed or was about estimating SME's optimal capital structure using says using demoter and synthetic rating. I think leaving that at evaluating optimal capital structure is probably enough. If you're exploring appropriate weighting of debt and equity for firms you're valuing, this is a math-heavy article demonstrating a potential method or at least considerations for your analysis. The proposed method for determining an optimal level of leverage hinges on the trade-off between tax shield and financial distress. Okay. BV update. If you're not aware, the Business Valuation Resource Panel from the Appraisal Foundation issued an exposure draft regarding appraiser competency meant to assist business owners, attorneys, and users of business valuation services in evaluating those providing business valuations. There's some potential issues with the guidance that the draft gives, but one of the most provocative issues is its suggestion that USPAP, above other standards, should ideally guide appraisal work. The BV update article points out flaws in the draft and ties it to similar issues we've seen in the past. It's well written, worth a read. The NACPA submitted a response on behalf of its members, and I expect and hope that it was not the only organization that did so. So I just couldn't help thinking of the buzzards in the Jungle Book. BB Wire, the AICPA's Financial Reporting Executive Committee, FINREC, is seeking comments on a working draft to update its valuation, its cheap stock guide. The draft updates the 2013 edition. Comments are requested by June 1st and will be kept confidential. The Appraisal Foundation held a webinar on the use of technology in appraisal practice. The board emphasized that AO41 is deliberately principles-based and does not establish new standards or promote adoption of technology. Speakers included the ASB chair, the vice chair, and the TAF vice president of appraisal issues. They stressed that's not meant to create new safe harbors for artificial intelligence, AVMs, or other automated tools, and it was looking at placing greater emphasis on appraiser judgment rather than offering checklists or bright line rules. Written comment period ended February 2nd, but verbal comments will be accepted during a public meeting on February 19th, and I believe I have the link in the presentation later. Okay, so the case for out-of-court wind downs. Out-of-court wind downs offer superior control and privacy over bankruptcy. Creditors can recoveries can equal or exceed bankruptcy outcomes. Strategic project completion analysis may maximize asset value, where you can retain authority to make decisions on completing projects or not. And then rising interest rates and credit tightening have been accelerating out-of-court solutions. So be looking for this as a potential bankruptcy option that may benefit creditors. So links to all of these articles are here, and a few extra links as well. I hope you found it interesting, and I will see you back next week.
Thank you, Janae. So, yeah, thank you. That first polling question is up as we move to our next segment, which is with David Fein and Dave Miles of Value Source, talking about data-driven benchmarking and how to use them in valuations and everything. David and Dave, I'm going to let you take it from here so we can jump right in, because I know you have a lot of stuff to share with us.
Cool. Thanks, Mel. We're going to talk about specifically ProSite, which is the new name for RMA, Annual Statement Studies Valuation Edition, as sort of a general discussion point on benchmarking, using it in your valuation, the kinds of data to use, and the kinds of conclusions that you can help find. So RMA Valuation Edition is a better way to benchmark. But once again, we want to use this as an overall conversation about data. Next slide, Dave. So let's talk about benchmarking basics for a minute. NACFA standards requires a comparative financial statement analysis. So then the question becomes, what data to use? And then the other thing to keep in mind, I think a great context is if you look at valuation data multiples from any database, whether it's smaller databases, like Value Source Market Comps, Deal Stats, Biz Comps, bigger ones, merger and acquisition kind of comps, public companies, whatever, the range of values is significant. So in smaller companies, they're 300-400%. If you're looking at price to seller discretionary earnings, price to revenue, pick any other kind of multiple you want. And really what this means is, revenue and cash flow are pretty much the same. They've been kind of normalized when you're using ratios. So why are values so different? So if you have companies with the same revenue and the same cash flow, why are those values different? It's kind of an obvious question to evaluators. Obviously, risk is the component. So then the question becomes, how do you dig into that? And that's the entire field of valuation, right? Understanding cash flow and risk. But looking at risk and looking at financial strength is a good way to give you a lens, an indicator on how all that works. So accurate benchmarking helps support credible, defensible valuations because you're getting a good lens into company strengths and weaknesses, and it provides empirical evidence rather than more subjective kind of evidence. So specifically, what benchmarking does is it helps enhance your judgment about cash flow and risk. ProSite Valuation Edition clarifies some results that otherwise are unclear. Now, there's a lot of sources of comparative data. They each have strengths and weaknesses. It's important to understand those. So when you're using them or selecting them, you can have some kind of a context to do that. One of the things I will say is transparent data in the financial statement benchmarking world is a little hard to find. We'll get into exactly why later on. But and let me just say this is pretty obvious. Results still require professional judgment to interpret and apply to evaluation engagement. Next slide. ProSite was initially created because of a recession and banks were writing off loans. It was created in 1915 by a group of bankers to mitigate credit risk through an exchange of information. And it was called Robert Morris Association. Actually, I learned this recently. Robert Morris is a kind of unknown key person in the founding of the United States. He's one of the, I think, 2 people that signed all 3 documents, the Declaration of Independence, Articles of Confederation, and the U.S. Constitution. And he was known as the financer of the American Revolution. So he was kind of a really big deal. He ended up over speculating in land and kind of crashed and burned at the end of his career in life. But he's a huge guy. That's why they named this company Robert Morris Association. The name changed to Risk Management. It changed in 2025. They merged with ProSite. They've been creating the annual statement studies every year for something like 106 years. And the way it works is when companies want loans, they go to commercial banks, they submit their financial statements, and then those banks input those financial statements into a number of pieces of software that help them analyze it. So one of the things that's important is the credibility of data, and it's one of those lenses you want to look at in obviously any data you're using. This data is based on actual financial statements collected from banks, and it's very transparent, and they explain, and they have documents that explain how they're instructing the bankers to put this data in, how they clean it, how they scrub it. So how does annual statement studies compare to other databases? There's obviously a handful of databases that you can pick from. One of the biggest differences is this data is completely transparent. Like we just said, it's based on financial statements. So any number in the ProSite or RMA data set, you can actually, now they obviously don't publish the underlying financial statements, but they go back to financial statements and they explain the math behind how they do that. If you haven't seen the preface to the ProSite or RMA book, it explains all of that kind of stuff. And on the other hand, there's many databases that use a lot of data from a lot of different sources, and they're not really specific about what data they're pulling. And they also model that data and backcast it. So in other words, there's a lot of algorithms going on in there, and all of it is not transparent. So just know that. Now, the plus side of some of those other databases is, there's more SIC codes, there's more asset and sales categories, there's a lot more discernment in terms of geography. You can get down to MSAs, metropolitan service areas. Some of them even have zip codes. So how do you use this data in practice? You select an industry, you take a look at asset or sales slices, and you can use our p-tile or percentile rankings, which is sort of the big deal. I think RMA Valuation Edition, the thing that really stands out is there's 10 times more data in there. Dave will get into that in detail when he shows it to you. So the 2025-6 data has 180,000 financial statements. There's about 640 industries. And there's a ton of coverage of companies under $10 million, which is an important thing for this group of valuators. Many of you are valuing companies $10, $15 million and less. Next slide. So why the Valuation Edition? And what kind of things to think about when you're picking benchmarking data? We've partnered with ProSite to help them create the Valuation Edition, and we publish our percentile calculation to general deciles data. So once again, completely transparent. If you're interested in that, you can reach out to us and we'll get it to you. And you can also use interpolation to get more specific percentiles. In other words, the RMA data gives you every percentile from 10 to 90. But if you want to interpolate in the middle of that, we can help you figure that out. And our software in Excel does that automatically. That data is not published directly by RMA. You can only get it in the Valuation Edition. So the ranking analysis is the key thing that we think adds credibility, and we'll get into those details. So it really provides data-driven evidence for a more credible financial statement benchmark, once again, leading to insight into risk, cash flow, and underlying risk as well. This has a lot of current data in it. Like I said, some of the other databases that provide financial statement benchmarking are collecting and compiling data from a lot of different sources in a lot of different years, and it's hard to know what that is. The other thing people don't realize is in the annual statement studies, you need a license to use that in valuation reports. If you get the Valuation Edition, it includes that. Next slide. So the valuation data percentiles, what does the entire industry look like? So, typically in financial statement benchmarking, and if you take, for example, their standard RMA common size statements, you end up with averages in there. So what that does is it shows you sort of the central tendency of a company. What we've done to work with ProSite to do is give you the entire curve. So you see every number from 10 to 90. So it really gives you a sense of what the industry looks like and how your company fits into that, which gives you a much more precise picture of how the company is performing. So many benchmarking analysis are sort of a red light, green light, yellow light, which we'll explain in a second here. Next slide, Dave. So, the standard sort of benchmarking approach is, like I said, green light, red light, yellow light, meaning we're either sort of at the industry average, we're above it, we're below it. So if you have a company metric doesn't matter what it is, at 20%, let's say the benchmark is 15%, you can say things like, we're 33% above the benchmark norm. But in ranking, if the company metric is 20, you can actually rank it. So between 10 and 90, you can say exactly where does that fit. In this case, it's maybe the 80th percentile. So that is much more precise, because even though you have statistics with the first method, maybe even standard deviations, trying to explain all that and understand all that is really complicated. So with rankings, with the percentiles, it's sort of like SAT scores. Everybody, is taking the SAT. You've got, kids, grandkids, cousins, somebody with the SATs. Nobody cares about the actual score. What you want to know is what's their ranking. Were they at the 97th percent and they're getting into a top level school? Were they at the 23rd percent and it's going to be hard to get into a top level school? Everybody understands that ranking, and this is exactly the same way. One thing to note here is different ratios, higher means a different thing. So in other words, profit is better with a higher percentile, expense is better with a lower percentile, and you just need to pay attention. Next slide. So report examples, which analysis or which thinking is more credible? Doing the red light, green light, yellow light thing, saying, our expense is near the average, so we're not making adjustments to the discount rate, or saying, we are at the 38th percentile of companies, which means 62% have a lower indicator. So since operating expenses should be low, this company is much better off. And, the value, obviously this is a judgment call. The value could be higher because the company is very strong financially. Next slide. So here, I'm going to turn it over to Dave to actually take a look at the RMA or ProSite Valuation Edition.
Thank you, David. So when you log into keyvaluedata.com and you choose RMA, we have three different areas here, 1, 2, and 3. The first is how do I sort all of this data? 160,000 statements. How do we get all of that into a place where we can actually use it and compare it against our subject company? And so what we're trying to do here is say, do we want to do a spread analysis, a multi-year analysis, or a single year? And which year of data do we want to look at? And so I'm just going to choose a single year to start with here. I'll show you a multi-year spread in a moment. And I'm going to choose the V over here, says it's the valuation edition, so it has those percentiles in it. Our next choice is to choose from a list. So I can come over here and say, okay, as I scroll down and I get to my stuff, where am I at? And because the lists are long, we can also do it from a search. So I always like to use certified public accounting firms as my sample. And now I choose it here. And so that's how I can choose my industry. And then we get to the best part about the ProSite data. And that is that we get to get granular. How big is my company and what should I be comparing it to? So, we have choices between assets, sales, and historical. So let me show a couple of asset slices here. There's 5 different categories. I can go into those slices. And as I scroll down into my working pane down here, we have a summary tab. And when I said that we extend the data to dollars, if you look at the data, you'll always see, oh, here's the average asset size. And you can multiply your percentages against it to come up with, a dollar figure income statement and a dollar figure balance sheet. So in this case here, I'm looking at 3.4 million. Now, if I go back to my sales slices and I'm looking at things, and I always like to choose the 1 million to 3 million. And just so you know, bankers have been using M as representing 3 zeros forever. So the MM is 1 million to 3 million. That's what the M stand for. And so if I come into my 1 to 3 million, I get 1.9 million in sales. And if I go over to my 3 to 5 million, I can get 3.8 million. So you can bounce between those asset categories and the sales categories to get closer to what your subject company is. When I look at this summary sheet, and like I say, I'm looking at a 1 to 3 million. What are we looking at? A 10 person accounting firm, something like that. Just guesstimates. You can come down here and you can say, okay, here's the common size income statement. Here's the common size balance sheet. And you can also get into your statement counts. Now the statement counts in this case here are 79. So if I take 79 statements and split that into 10 pieces, which is what ProSite does for us. They say, okay, in this particular category, this particular slice, I am going to split each individual item into 10 pieces. And that means I got about, a little bit less than 10 in each one of those slices. So that's a good thing for me. When I come over here to the income statement, you get to see how that starts to roll out. And I'm over here on operating expenses. The average, just because of the way math works, if you add your averages up, it will all add down. So 100 minus the 81 gives you the operating profit, plus the 1.2 gives you your profit before taxes. The 50th percentile is the median. And as we look at measures of central tendency, I don't know about you guys, but I like to look at different measures and say, okay, how close are we together and how far are we apart? In this case here, 81 for operating expenses and 79 is not that far apart, but I have seen it be fairly substantial. And you would be saying, wait a minute, why is the median so much different than the average? And we always know that it's an outlier skewing it, usually towards the high side. And so, you can take a look at the median and you can see there. Additionally, if you look at this, and this is, how do I want to say this? If you look at operating expenses, you want to be in the lower percentiles. If you're looking at profit before taxes, you want to be in the upper percentiles. And so you can say, how does my subject company weigh in on this particular curve? And so if you're looking at profit before taxes and you're saying, well, the average is about 17%, but I'm up in 26% return, all of a sudden now you're skewing way high. And we know that, profits and the ability to generate profits are going to drive value at some point. We also have the ability to come in here and go regions. Now, I'm going to steal something from somebody I know, and they say, why would I want to go to a region? And she told me, well, what if you have a boat dealer in Idaho and you have a boat dealer down in Florida? Are those two companies going to be operating the same way? Are they going to have the same margins? Are they going to be doing the same sorts of things? And so sometimes we want to go into regional data. And that's what I did here. So I'm in Colorado, so I picked my regional data. And as I look at this and I start to look at my return over here, I go to 15 companies. Now I might be asking myself, can I really take 15 companies and split it into 10 pieces? I'm feeling a little uncomfortable with that. But what I do like about the percentiles is that it tells me about the median here. And again, if I come over here to the profit numbers, I have an average of 21%, but my median is 25%. And I'm starting to say, wait a minute, the median is higher than the average. That means that a lot of companies are making less profits out here. And how does that affect the valuation? This is where your judgment comes in. Hey, I'm using quantitative analysis to arrive an opinion for a valuation of this company. But looking at the median here, you can say, wait a minute, this is not the middle anymore. A lot of companies are doing worse and they're not returning as much profits. And you can do that on a line item by line item basis and see where you're coming in at. You can also use linear interpolation, and you can say, okay, if I'm making 26%, I can say, okay, I'm at the 52nd percentile, and you can look at that and see exactly which percentile you're at and get that ranking inside of there. There are two ways to get out the data. If you choose this data tab, it just gives you these on a spreadsheet. If you choose the analysis tab, it allows you to go out there and input the subject company's financial statements, and it does a lot of that linear interpolation on your own. And let me show that real quick. So if I'm lining up a particular year, I can come over here and say, okay, I'm in the 65th percentile, 75th percentile, and I can work my way down. And then I can use that information if it's a driving issue. Oftentimes we know that there's only 3 or 4 numbers inside of a valuation that make any sense to talk about. Let me come over here and say, instead of a single year, I can spread this. I can choose how many years I want. And so now I can say, okay, if I'm looking at, a sales slice and I'm in soybean farming, I need to go back and change it to certified public accountants. I can come down here and I can say, okay, here's my 5-year spread, and I can get to there. I'm going to go back to the presentation now and say our contact information is inside of here. And I believe, Mel, that's about where we stand. Did you want to add anything, David?
No, I'm good. Thank you, guys.
Great. Thank you, Dave and David. Really quick before we go to the next segment, just want to play a quick little video. There we go.
NACVA announces the AI Bootcamp, where experts go to upgrade their skills. Championed by NACVA's Artificial Intelligence and Machine Learning Commission, the boot camp will be held February 19th and 20th in Salt Lake City, Utah.
Join us at the NACVA AI Bootcamp, where experts go to level up. This isn't just learning new tools, it's leveraging ones you use. Outlook and Word, with the right prompts, they anticipate your next move. Emails draft themselves in your tone, condensed with clean summaries. Meetings scheduled instantly with action items. We used to take 5 steps, now it's 1. Stop managing communication, start commanding it. Report writing strategies take shape with more clarity, stronger structure, and tone. In litigation, confidence is everything. Imagine your own AI interrogating you like opposing counsel. We pressure test your work before anyone else does, and we use AI to do it.
Catch errors in your valuation or forensic report before a reviewer, opposing expert, or IRS. The result is not just speed, it's accuracy, defensibility, and confidence. Your report become cleaner and more consistent. Assumptions get flagged early. Logical gaps surface before they become credibility issues. AI becomes your structured reviewer, helping reduce risk and improve quality systematically. AI is no longer an option, it's competitive advantage. This bootcamp is your chance to get ahead. Join us and start transforming how you work. One prompt, one insight, one innovation at a time.
The question isn't whether AI will impact your practice, it's whether you'll lead the transformation or scramble to catch up. NACVA's AI Bootcamp isn't generic, it's built specifically for CVAs and forensic accountants. Master advanced prompting frameworks for report generation, learn to customize AI for your workflows, discover techniques that cut research time by 70%. 2 days of focused training, real-world applications, skills you'll use the morning you get back into the office.
NACVA's AI Bootcamp, February 19th and 20th in Salt Lake City, Utah. Visit www.nacva.com AI Bootcamp for details and to register.
All right, so the bootcamp is next week, but we do have different dates as well later in the year. So if you visit the link or scan the QR code and scroll down to the bottom, you'll see some of the other dates as well. And then just really quick about the resources of the webinar series. If you scan that QR code, you'll go to our website, the page that has a lot of more information about AI resources and webinars that's available to our members. And with that, I'm going to turn the time over to Alina, who will get us started with the next segment.
Thank you, Shonda. And for all of you that have been asking questions about AI, I think this is going to be a great bootcamp and training. The 3 instructors are amazing. So, and right now we are going to have Dimitri Yimga. He's one of our correspondents, and he's going to be interviewing Mark Hahn and David Harkins, and they are going to be talking about getting personal with personal goodwill. Hi, Dimitri. Great having you back.
Alina, thank you. Hi, Mark.
Hello, how are you?
Doing great. How are you?
Doing good.
Let me share my screen. Awesome. So thank you everyone to being with us today. We will be talking about one of my favorite subjects, Goodwill. Of course, AI is like top, and then Goodwill is second for me. And we have Mark Hand here from Baker Tilly's Forensic Accounting and Valuation Practice. In fact, Mark is going to be holding a class today about the topic, so we'll just get a primer of the subject. He's going to be going more in detail. There's a lot of things to say about Goodwill, and I know he's going to give us a lot of good information. Hi, Mark, and thank you again for joining us today.
Sure, it's an interesting topic, and in my practice, growing more and more important.
Yeah, I definitely also experienced that, and it's usually pretty tricky how, especially when it comes to valuation, how to separate and figure it out. So, what is Goodwill? Just what is Goodwill? How would it define it?
The simplest answer that you often see is sort of a shortcut of saying goodwill is the total value that we calculate for the company, typically under an income approach, subtract the value of the tangible assets, and you're left with goodwill. Now that's a very simplistic approach because goodwill follows the definition in Internal Revenue Code section 338 and 1060, where it's a residual method. So it's that value that's left over. And the important point is that if you can not only value the tangible assets, but if you can also value other intangible assets, whether it's your software, your technology, patents, trademarks, all of those come for goodwill. So you would subtract the tangible assets, the other identified intangible assets, and then you're left with this other intangible called goodwill that we'll talk about slicing up.
Yeah. So what are the type of goodwill? Is there more than one type of goodwill? What are they?
There is, for our purposes, I do a lot of family law, but I've also dealt with it in the income tax area too. And the personal goodwill concept, I think, first came about or became popular with a case called Martin Ice Cream, which was a tax case. And in that case, you were dealing with a C corporation. So the sale of personal goodwill was the sale of a personal asset. You could get capital gains for it. You could avoid the double taxation. And so that's why the IRS didn't like it. And the Martin Ice Cream case came about, which gives us sort of the beginnings of the big issues over personal goodwill. In family law, in many states, personal goodwill can't be separated from the individual, and therefore it's not a marital asset. So it's not part of the marital estate to be divided up. I see that David has joined us on the screen.
David joined us. Yeah.
Other comments.
Hi, David. Your mic is mute.
Hey, can y'all hear me now?
It's good now.
Yeah. So,
no, go ahead.
Sorry, personal goodwill matters. In transactions, there could be favorable tax treatment, and then also, as Mark said, in a lot of states, it's not a marital asset, so it's not subject to division. So, there's a lot more judgment. There's people complain sometimes that there's not one way to value a business. Just when you come to the headline, what's the value of the business? Well, it becomes a lot more sticky, much more gray area and area for argument amongst experts on how to attribute value to personal goodwill versus as contrasted to enterprise goodwill. So as Mark was saying earlier, goodwill is kind of a shorthand for all intangible assets. And so enterprise goodwill is basically all the other things that keep customers coming back to the business other than the tangible assets or the presence of the owner for whom we are attributing personal goodwill.
So let me ask, can you transfer personal goodwill?
David, what do you think?
I think it's a matter that's up for debate. As something we'll talk about later in our presentation, we add an adjective. You have personal goodwill, and then you have pure personal goodwill. So that could be a separate argument where it's you see a lot that people are able to, and if they are correctly motivated, than they do. We see a lot of times with dental practices, doctors, where the value of the business is part and parcel with the physician that is practicing. However, when it's time to retire, they don't always close their doors.
Yeah.
Their retirement plan can be to bring on another doctor to sort of take over their book of business, and they do their best to make sure that the earnings transfer to the new person, because then they're willing to pay for the practice that the doctor built up over the years. So sometimes you see during a divorce, someone will say it's all personal goodwill. If I walk away, nobody is here. But if you say, okay, well, you also get nothing in retirement, they'll say, well, hold on, let me now try to bring someone in, and maybe I'll try to transfer them up, and maybe I'll get them to pay me a little bit for the practice. So, it's our job as neutral experts to come in and separate fact from fiction.
Right. And using that example of doctor practice, let's say the doctor's retiring, sell the practice, and then have to sign a non-compete agreement, all that. So how does the non-compete agreement affect the personal goodwill?
I think anyone who is selling a business wants to get the top dollar, particularly if they're retiring and not planning to compete. So they'll do everything within their power to not only sell this enterprise aspect, but also to sell as much personal transferable goodwill as possible. And by entering into a non-compete, you're trying to enhance the value to the buyer, saying that I'm not going to steal back part of your purchase price and compete with you and take business. Instead, what I'm representing as the earnings of the business is going to continue, because I'm not going to compete. I'm not going to take back any of that value.
Yeah, that's fair. So, and I think this one will matter a lot for everyone listening, since we're business valuator, most of us here. How are there ways recognized to calculate personal goodwill?
There are. We'll be discussing this more in depth. There's a with and without income approach, where you try to value the company with the individual involved, sort of as is, and then you build a set of assumptions to say, what if this individual was not here, or what if this individual was not only not here, but also competing? What would that do to the business? And the difference in those two valuations is the personal goodwill. That's sort of a quantitative approach. There's a qualitative approach that is called the MUM theory, multi-attribute model, that we'll discuss in some further depth. But that is more of a quantitative, looking at the factors, personal goodwill, the factors of enterprise goodwill, weighing those to come up with a percentage.
And I'll say, as numbers people, if someone tells you, well, there's a quantitative and a qualitative approach, everyone here probably says, oh, well, let's go with the quantitative. We're numbers people. That numbers never lie. As we'll get into in our presentation, there's a lot of judgment and kind of gray area in the assumptions that you have to, the hypothetical assumptions that Mark was outlining to do the with and without appropriately. So it's really not one of those situations where quantitative just clearly beats qualitative. Here, it's sticky enough, and you're going to need to make significant enough assumptions that, kind of marrying the two is probably something worth doing.
Yeah, so you need to be able to justify your approach and your assumption as well, just to make it, because, yeah, like you say, very, very gray, pretty much. And and I think you kind of touched on that a little bit earlier, but how do the view personal versus enterprise goodwill?
Say that again, Dimitri. Missed a little bit of that.
Yeah. How do the courts view personal versus enterprise goodwill?
Good question. I think it's important to remember that, personal goodwill can come up in negotiations. There can be settlements. At the trial level, typically those opinions aren't published, so it's those that go to the appeals level that get published. So, and what I've experienced is that the courts are looking for fairness. Family courts are courts of equity, so they are looking for fairness. And while I used to hear people say that if there was the necessity of a non-compete, then all of the goodwill is personal goodwill, I never really bought that. And so in the work that I did, I always tried to carve up personal and enterprise and have a basis for that. And I found that the courts typically followed a reasonable allocation. If you had good assumptions and can justify those assumptions and good logic, I've found the court is looking for a fair way to apportion between personal and enterprise goodwill.
And I do have a question that just came through, and I think it's going to be something maybe covered during the class. But how do you differentiate between personal goodwill and key man risk?
What I would say is what's more important than maybe differentiating is not double dipping. So
Yeah.
doing a with and without income approach, you can say, what are the earnings with this person? What are the earnings without that person? What you want to make sure you don't do is then say, well, if the equity discount rate should be this, it needs to be higher to account for this person not being there. And then you hit it a third time saying, okay, we're going to take 20% off of our concluded value and call that personal. So you can get to triple dipping. And what's important is that you are not penalizing the value of the marital interest for three separate times for the same risk. So, if one expert came and said, I think the discount rate needs to be way higher to account for this risk, and a different expert says, I think the discount rate doesn't change, but I think the earnings have to decline. Or if one says, I'm not going to change either, but I'm going to allocate to personal goodwill, all three of them might end up with the same number, just with different inputs trying to get to the same place. The key is that you don't do all three of them and sort of triple dip for what is the same risk. Now, if there are different reasons for the risk, say, if is it the skill of the service that they're providing, for example, no one else could provide that service. But then in a lot of these situations, they're also the business owner, they're running the practice. So, the kind of the COO as well as, kind of the top salesperson. If you could kind of split those off, maybe there's additional key risk because they're doing both of those jobs and you don't have a good management team to support. That's a situation where you could have kind of two separate ones. But again, nuance and fun discussions where facts and circumstances really matter. That's what the courts care about, is that you're able to logically think through it. And we'll get into more of that later today.
Yeah.
One of the elements that we'll talk about. So one of the elements that we'll talk about is how the size of a company can impact personal goodwill. And if you do have a small company and key individuals, that is an element of risk that needs to be accounted for. But again, you need to make sure you're not putting that personal goodwill element into the risk. And then again, taking a discount for personal goodwill or a key man discount and getting up to those triple or quadruple dips.
And one clarification I want to offer, and I'm sure Mark will agree, because I saw another question. We're talking about here all intangible assets. When you're making a distinction between personal and enterprise goodwill, we're not exclusively talking about goodwill and ignoring the other, what's called identifiable intangible assets. We are talking about all assets or value over and above tangible net assets. So that's where the percentage attribution would come into. It does, as the question asks, it does impact the other intangible assets as well. What it doesn't impact is the tangible assets.
Yeah, I mean, this is a very wide subject, and I think personally very, very interesting when it comes to valuation, because it's really great. It's not just numbers straight. So what would you say, we kind of at the end, what would you say to the viewers, especially those who will be attending the class? What else can you add? Did we forget to cover anything?
I think we learn more and more about personal goodwill as cases come out and we see interpretations that the courts have made of personal goodwill. There is no one size fits all. There is no way to say you do personal goodwill by these steps A, B, C, D, and that's it, because the facts of every case are different. You'll find a wide variety of court views on personal goodwill, and sometimes there will seem to be a theory that the court doesn't go with. But when I look at the case, I think the court was going for more or less equity between the parties than it was for evaluating technical correctness of one approach over another.
Yeah. Thank you so much, you both, and looking forward to the session. I think again we can't cover it all in this time slot we have, but it's a great subject. And thank you again for joining us today, and thank you
Very
everyone
well.
else.
Thank you.
See y'all later.
See you later.
Thanks, Dimitri. Thanks, Mark and David. Really quick, just want to go over a couple more items before we move on to the next segment. Okay. So, as Dimitri and Mark mentioned, we do have a webinar, Getting Personal Goodwill, later on today. If you are interested in joining that webinar, there is a QR code where you can register. We also have IPEV guidelines in a nutshell, best practices for portfolio evaluations, coming up next month for the ABW in-depth webinar. Before we move on to the next segment, I also wanted to indicate that our 30 under 30 nomination forms are up. If you have anybody who is under 30 that you work with, who you'd like to nominate, please scan the QR code or click on that link. Nomination deadline is May 31st. And with that, I'm going to turn the time over to Mel and Alina, who will get us started with our judges segment, which is one of our hot segments each month.
Thank you, Chinda. This is something that I'm really looking forward to. We have Judge Yates and Judge Platt with us, and Alina should be here. And we're gonna be talking through a couple questions about when the mistake stops being a mistake, and what's the expert's responsibility, how do the judges view it, what do we need to do, what are the court's expectations, and I think probably most importantly, how the heck do we survive something like this from an individual standpoint? And so, first things first, let me welcome you guys back. Your Honors, I just from the membership per se, there's so much gratitude for having you here and your knowledge and your wisdom and always being willing to give to us. So I'm going to start off with just some gratitude to start. So let me start with the first question, and that is, when it becomes clear that an expert's opinion was based on information that is later shown as incorrect or beyond incorrect, fraudulent, how do you evaluate that expert's role at that point, and what's the next steps? How does that play out in the courtroom?
I can tell you my perspective from the many roles I played as a lawyer before I was a judge. Whenever you detect a significant error, you need to let your retaining counsel know right away, and you need to get that in front of the court right away. Now, whether that disqualifies you from moving forward as an expert is one of those decisions I think that's primarily left up to your retaining counsel, because as a judge, I would never disqualify somebody for making a mistake that they then turned around and cleaned up in front of the court. And I wouldn't have any qualms if I were the trier of fact in listening to their corrected opinion. And obviously a jury would never know about that. I suppose there might be something on cross-examination, but retaining counsel, it seems to me, has the biggest decision to make about whether to substitute a new expert in place of you. But there's no question in my mind you have to clear the air immediately.
My comment would be that I think what implicit, in fact, almost explicit in what Judge Yates just said is this shouldn't happen in a courtroom.
Yes, agreed.
And if it does, it reflects a lack of preparation, not so much on the part of the expert who can only base his or her opinion on the information they're being given, but on whoever it is that was giving them the information, and or the lawyer, the hiring counsel, who didn't check to see that the information was in fact incorrect. But after that, then the question becomes, okay, I wouldn't hesitate either to listen to an expert who corrected him or herself once the information had the, I guess, the knowledge and the quickness on his or her feet in mind to be able to shift their opinion based on new information in the middle of a courtroom, in the middle of a testimony. And if that's the case, then they're worth listening to. If in fact, and I can't imagine this is the case, but the unlikely event that the expert had something to do with the, and I'm looking at the question, incorrect or fraudulent information, then of course their role is zero.
Yeah.
If that comes, but I mean, I can't imagine that logistics of that and how that would ever happen. That very few experts are providing their own information, but the only other question would be whether the expert demonstrates the knowledge to question the information they were given, or whether they just took information that seemed illogical or improbable and turned out to be without being in any way critical. But that's back to the hiring counsel's role. But if it happens in a courtroom, if somebody didn't prepare.
That makes sense, because we take on engagement. A lot of times I see engagement letters that say we have no responsibility to do audit procedures, verify that or check for fraud.
Right, that's to keep that's to protect you from some liability for something you shouldn't have had anything to do with, or shouldn't have that responsibility. And the retaining counsels or the agreement is making sure. That part I suspect was drafted by the expert's counsel or the expert, him or herself. But there's always enough blame to go around when something goes wrong.
Yeah.
And the the instinct of hiring counsel is it couldn't have been me. And likely that it was. Especially if hiring counsel took the information that was given to the expert solely from his or her client without in any way examining its credibility or where that came from or whether it's opinion or fact. It's that famous quote from Daniel Patrick Moynihan: everybody's entitled to their own opinion, but not to their own facts. Right. And you have that is something that has to be looked at. And I think the expert, not because they have any legal duty, but because they to protect themselves, should say, I really find this very, very hard to believe, and I'm not sure you want me to base an opinion on this. And if that's the case, you don't want to put yourself in a position where judge is going to not probably allow the question, do you really believe what you just said, or the basis for what you just said? But so it's the question in that form is not going to be allowed. But if you're a good lawyer, you're going to find a way to do that, or to bring that out. The question is not what's your opinion based on these facts. It's should you have believed all those facts to begin with.
Yeah. If I could just add one more thing, I want to pick up on a subtle point that Judge Platt made and amplify it because I think it's important. To the extent that you're protected in your retention letter, that really just goes to the allocation of blame and perhaps even liability after the fact. The takeaway, though, in a broader sense, is that the fault is all going to fall on your side of the V on the caption. And the judge isn't really going to care whether it was the retaining counsel's fault or your fault or the client's fault. The point is there's plenty of fault and it's only going to go to one side, not the other. And you need to clean that up.
And right, again, and whose whole fault it is depends on who you ask.
Right.
Right. I should note, Mel, that Judge Driscoll has now joined us. And although he may not have heard the question, I'm sure he has something intelligent to say if you want to repeat the question, because he always has wise words to add.
Okay.
Absolutely. Welcome, Judge Driscoll. The question was, when it becomes clear that an expert's opinion was based on information that's later shown to be incorrect or even fraudulent, how do you evaluate the expert's role at that point?
So that's a a great question, and it's a question that we judges are confronting, not just with respect to experts, but of course with respect to lawyers. There is not a day that goes by that another example of a hallucination, and generally in a lawyer's filing, hits the airwaves, and how is a judge to deal with it. And I guess I always harken back, like I often do, to my Catholic school education and to my study of the scriptures, particularly Psalm 32, which is, the Lord hears the cry of the poor, blessed be the Lord. What do I mean by that? How does that apply? Well, if you tell me you've made a mistake, then it's much easier for me to understand it than if you adhere to the mistake and double down on it. And that goes for experts, that goes for lawyers. I've only had to address hallucinations in my courtroom on one occasion, and it was a lawyer who when confronted by his adversary with hallucinations, immediately said, "Oh my gosh, this should teach me never to write a brief when I'm at my kid's hockey game on a Saturday. I am so sorry." And my response in the courtroom on Monday was, "Okay, I got it. There's been no prejudice to the other side. You submitted a brief then on Sunday. The other side got to read it. Don't do it again," is my remonstration. I would offer the same remonstration, I believe, to an expert. I'm not saying what I would do because I can't, but again, the quicker that you acknowledge the mistake, the better it is for you. And I so agree with what Judge Platt said about that, and Judge Yates about that ultimately this isn't going to be about you. It's going to be about the client and the result for the client based on those failure to acknowledge mistakes. We don't deal in reputations in our courtrooms. We deal in results for the parties on either side of the V. Your reputation as an expert or as a lawyer may be a collateral consequence of that, but ultimately it's gonna hit the decision as it affects the client.
That's a huge distinction for us as experts to accept and realize that you're focused on the results for the parties, and our job is to testify as an expert, and the repercussions can be reputation breaking or making, I guess, as we have it. But that should not be at the forefront of what we're doing.
Absolutely. We lawyers, experts, we're in the service business. And who are we serving? Our clients. And so what are we trying to do? Or what is everybody, not a judge, trying to do? Everybody is trying to get the best result for their client, and of course, consistent with their reputation and consistent with their reputation for honesty, integrity, professionalism. But ultimately, this is about delivering a result for the client.
Some lawyers have in common with AI, they both hallucinate.
Alina, I think you're back with us.
I'm back.
All right.
Yes, I keep hearing the conversation. And what about if you're sitting there and case just started, and then we discover that our information is not correct, not because we did it on purpose, but we are hearing some information that now came to our attention. And can we withdraw from the engagement? How a judge will see it? If we say no, is the lawyer responsibility to deal with this issue? Because now I am not going to sit there to try to defend a report that now I know that information is not correct.
Well, I would say this: if something comes out in the middle of the trial and you might not have known it was coming, nobody's going to blame you. Obviously, it creates an enormous strategic problem at trial because your retaining counsel is given an opening statement and explained what the evidence is going to show, including what you're going to testify about. And you may find yourself in a difficult spot there. But please understand that if you withdraw, if you say, "I'm not going to take the stand and testify now because I've been undercut," there's no way that the court's going to allow a new expert to substitute in mid-trial. If this comes up 3 months before trial, you might have a judge who'd be very understanding and would say, "Okay, you can sub in somebody else." But I can't imagine that any experienced judge would let a new expert who hadn't been deposed or anything take the place of the one who's been designated for months and months.
I would also Go ahead, Tim.
That's a way of course, ensuring or creating the risk that the judge does the one thing that the judge absolutely doesn't want to do, which is try the case more than once. So we are very interested. So when you're thinking about this, I give the same advice to lawyers is from the judge's perspective, the judge wants to bring the case to resolution. The judge is a game show host deciding who's the next contestant, the next case, when you go to commercial, how much time we have for each case. And the judge doesn't like reruns. Nobody likes reruns, right? So anything that creates that risk. And so that ties into Judge Yates' point. Expert, you can maybe you don't get to testify or you don't want to testify, but I'm not allowing a new expert to come in mid-case. And that's on counsel. Again, this is the great thing I think about being an expert is it's all on retaining counsel more than it's on you in the eyes of the judge, because we know how to deal with lawyers. We know lawyers. We deal with experts in our courtroom, but we were lawyers. We have training as lawyers. Our expectations are vis-a-vis lawyers, and then lawyers retain experts, and lawyers may have expectations vis-a-vis experts.
And again, all of this that what we're talking about should have taken place before you ever hit the witness stand in a courtroom.
Right.
And if it didn't, and in the middle of a courtroom, in the middle of your testimony, you now announce, for whatever reason that we've just talked about, that you were withdrawing, that would rival a Perry Mason movement where somebody jumps in the back of the courtroom and says, I confess, I killed him. But the bottom line is that if that ever happens in the mind of the court will do whatever it is it has to do to keep it, to not try to do it twice, which could mean a mistrial. If that actually happened, I've never seen anything like that happen before. Maybe my colleagues have, but I will say that if that again, somebody didn't prepare big time, and you don't want to have that. And in the eyes of the court, it's not your fault. In the eyes of hiring counsel, the next thing could be a lawsuit blaming you for whatever happened. Not a good idea to let that happen. And if you have any doubt if you have even a thought that something's wrong here with this information that I've been given, and I'm being asked to base an opinion on what I consider to be improbable at best and preposterous at worst, then you better tell hiring counsel.
So the bottom line is we, the judges, are the least of your worries.
Yes.
Really.
Agreed.
Really.
Yes.
If something goes wrong, we're the least of your worries.
Right. Right. If your retaining counsel stands up in opening and says, you're going to hear from this expert, and then the expert doesn't show because you want to back out of the case, we don't care. It makes the trial shorter, but boy, there may be repercussions on that.
Right. And it makes our career shorter, probably.
Probably too.
But there is a point, though, I would, as an expert, where if during the prep for the trial, we haven't hit trial yet, but during the prep for the trial, that we might find that issues surface that either preclude us from coming to a valid conclusion that we feel comfortable testifying to, or that the information we've been basing all of our analysis on is incorrect. And obviously we're not at trial, so it's not an issue in the courtroom at this point. But as an expert, at what point do we hit the point of no return where we can't get a substituted expert in? And now our obligation obviously is with counsel to say, hey, we need to change this. We need to do this. Can we ask for more time? I mean, how do we navigate that kind of a situation?
So the key thing is do not be an ostrich, right? Ostriches are nice to look at the zoo. They're actually very nice, served rare as a steak, but they are not an animal to emulate. Do not be an ostrich. You see a problem, you bring it up with retaining counsel in real time. And that's something to talk to retaining counsel about at the time of the retainer. Look, if there's an issue, I want to feel comfortable with you, Ms. Lawyer, to call you up in real time so that we can address this. Because again, judges, asking for a continuance on the day of trial is not as well received as a continuance a week before, which is not as well received as a month before, 2 months before. So,
Right.
the more advanced you raise the issue, the better you are.
And if opposing counsel detects that the factual basis for your opinion is fraudulent or well, certainly fraudulent and even incorrect, he or she is not likely to, if they take a deposition, they're likely not to tell you.
Yeah, for sure.
They're going to save it for trial.
Exactly.
So you can have one of these Perry Mason moments, maybe. Again, hiring counsel needs to be held responsible and accountable, because if you are in the kind of situation that we're talking about here today, it is likely their fault, but they're not going to see it that way. And we got to anticipate a question, because I'm not sure we get to it. Your letter of engagement is between you and hiring counsel and their client. We don't care.
Yeah,
The scope of your letter of engagement will have absolutely nothing to do with what we do. For one thing, we're not on the contract.
Okay. Yeah. Go ahead, Alina.
Have you seen in some cases where the other part is just saying that one of the experts committed fraud? And how do you handle that if that happened to you before?
Accusations and adjectives are not well received. I tend to, let's take down the temperature. Why don't we start with counsel's analysis is incorrect because once you start curling around invectives, then it just becomes a name calling contest. So the minute I would hear the word fraud, I'd get very concerned. I say, all right, counsel, just tell me tell me what supports that conclusion, make the argument, or as Judge Platt said, point to me from the deposition, or here's your witness, cross-examine them. I wouldn't like anything that sounds like name calling or it sounds like accusations. Right. If there's a problem, again, what do we deal with? We deal with results on a case. And then if there's a problem, if someone's perjuring themselves in my courtroom, obviously it needs to be taken further. But the initial question is this expert to be relied on or not relied on? That's a much lower threshold than fraud or lying or any other word like that. So let's start here, and then if you need to build it to there, that's fine. Fortunately, I've never had an example of fraud. I've had experts who are less than credible for whatever reason.
Right. I agree with Judge Driscoll. It can be catastrophic in terms of the outcome of the case, but I can't imagine ever referring somebody for discipline to a professional agency, or even worse, referring them for a prosecution for perjury. I've occasionally had fact witnesses who are clearly perjuring themselves. I mean, there's nothing funnier than being a week and a half into trial and all of a sudden somebody takes a stand and starts testifying at variance to all the documents and all the other witnesses. And a couple times I've actually told the lawyer conducting the direct examination, we're going to take a 15-minute recess. You go in the hallway with your client. You explain to him the penalties of perjury, because I'm not going to listen to this anymore. But that was with fact witnesses where I was absolutely sure that they were lying under oath. It's much more subtle with experts. And so I think Judge Driscoll's exactly right. If you are the victim of fraud, particularly if you intend to carry it on once knowing about it as a witness, it's going to blow up your retaining client's case, your retaining counsel's case, but it's not really going to hurt you outside the context of the trial.
Also, experts deal with opinions. They
right.
explaining with what they're doing, what they're offering opinions. They're perhaps getting into the facts only to illustrate why they're giving an opinion. It is impossible for an opinion to be perjurious.
I'm borrowing that, Judge Platt. That is beautiful. That is absolutely beautiful. I'm borrowing that.
I along the same lines, and I've seen this, and I don't do family law. I haven't for a long time, but I'm long ago.
Welcome to the club.
Oh my God. The only vow they remember at that point is death do us part. So,
yeah.
So the questioning in a case that I was in the middle of revolved around the reporting of income, let's just say not all of it, and or the aggressive expensing of things running through the business, which can smack of potentially tax evasion, if you will, if it's intentional, that stuff. Is there a responsibility when the questioning starts to come to that level on the part of the courts to report that out, or how does that impact that? Because a lot of it ends up self-serving. Each party is accusing the other of it. It's not necessarily the experts. We're working from a set of books, and if there's something off books that we're not aware of, that we don't have the data on, it's what we have to testify to.
I know that in most states, attorneys are bound to report misconduct that they see by other attorneys. And as members of the bar, we have an obligation to do that too. And I have occasionally made referrals to the bar of retaining counsel when I think something's been done that's highly unethical. But my colleagues can correct me if I'm wrong, but I don't believe we have any obligation like that to report to other professional agencies if there's misconduct.
Right. And again, I think that's certainly true. And you would never refer anybody, even if you were inclined to do so, on the basis of an allegation.
Yep.
By opposing counsel,
right,
or whatever word they use to accuse the other side. I mean, some lawyers will accuse almost in every single case that the other side is committing fraud or trying to deceive the court. Or the one I like because of what I do, alternative dispute resolution, is I don't believe he's negotiating in good faith. Why? Because he doesn't agree with you?
Yeah, right.
Yeah. Yeah. This is really helpful to start giving us a perspective here. When we start to see things unraveling and we're sitting on the stand, is there anything that as an expert we can do, or are we reliant on our counsel to do something with regards to that? Or can we as an expert do something as we're sitting on the stand watching the walls come down because we just realized something went wrong?
Your Honor, I desperately need a break. I'm so sorry. I need a break. But any more than that, I'm not listening to you. It's about counsel. So, you say you need a break. You may need the restroom. You may need to, I don't know, get a drink. You may need to stretch your legs, whatever it is. All right, Your Honor, I do need about 10 minutes if that's okay. That's good enough.
Yep. You don't have to tell us what the conversation is going to be during that break.
Now, if you have a flair for the dramatic and you want to lose your hiring counsel as business forever, you can have your own dramatic moment in which you clear the air. And I've never seen that happen, but I've seen it where I thought it might have been better if it did happen. I represented a client, a doctor who was an expert witness, and he wrote a book on how to testify, how a doctor should testify. And his cross-examination was always, you were asked this question on direct and your answer was this. Is that because was the answer under oath, or was it because on page 56 of your book it says if you ever get asked that question, answer this way? And his answer was both.
It has to be uncomfortable to be dealing with that once you're sitting there.
Yeah.
You have to leave the courtroom just to talk to your attorney at that time.
Right. And I'm sure you know that every time an expert testifies, somebody's likely to order the transcript, and it becomes part of this dossier of everything you've ever said. And so if you completely unload on the witness stand and blow up the case, rather than, as Judge Driscoll suggests, asking for a 10-minute break, that transcript will follow and haunt you for the rest of your career.
Yeah, absolutely. Now, the other thing is a court can, in an opinion, depending on how we say what we could say, the standard almost cliche is we are the judges of the credibility of the witnesses, and we find this witness less than credible or something like that. But if we say witness A lied,
Yeah.
none of us are going to do with any frequency, if at all.
Right.
Then somebody's going to take that and maybe refer it to bar counsel. Yep. or to somebody, to whoever disciplines you.
If you ever want to think about blowing up and the consequences, watch the end of And Justice for All with Al Pacino, where the judge says you're out of order. He says this whole damn system is out of order, and that, of course, was the last case that Pacino's character would have tried ever.
Went out in style.
Right. Right. If you want to see a good example of it, just recently, a new federal prosecutor in Minneapolis was on the record, and the judge was haranguing her about how the government wasn't following his orders. And eventually she said, "This whole system sucks. My job sucks. And I wish you'd hold me in contempt so I could go to jail for 24 hours and get some sleep." She was fired the next day. Still one of the great transcripts of all time. I read it over the weekend.
Yeah. Oh my God! I think with that we bring Michael Kaplan on to Michael. You there with us too?
I am here.
Yes.
I have got a story. I lived it. What we are talking about right now, I live on the witness stand. And let me tell you, it was an employment case. It was an employee of one of the public utilities in Southern California. I was an expert hired by counsel for the employee. I was asked to calculate her loss of earnings and benefits as a result of a wrongful termination. And I did it, and I had staff working with me, and I had my absolute best staff person, the one who never gets anything wrong. You know, that staff person who finds everything. We put together an analysis. Everything was perfect. The whole thing was together. I gave my deposition. My deposition was a couple of weeks before trial. I went in, I sat down, gave a deposition, laid the whole thing out. Got back to my office after the depo. My retaining counsel called me and said, "Michael, in your analysis, you used age 65 as the retirement date of the plaintiff in the case. What I'm going to ask you to do is do an additional set of calculations, one using age 55 as a retirement date, and the other one using age 60. Just a matter of changing retirement dates." So what I did was I sat down with my lead staff person, talked about what we needed to do and numbers we needed to create alternative calculations for, which we did. And keep in mind, in my office, everything is checked, verified, accuracy checked, source checked, ticked and tied, just made sure that it was right. We did that on the original set of numbers and on the updated numbers, the age 55 and age 60, because those would provide alternative measures of her loss of earnings and benefits. I was on the witness stand. During my direct examination, things went so well that the judge interrupted me twice in front of the jury to tell me what a good job I was doing giving testimony and how clear I was. Under cross-examination, the first question was, "Mr. Kaplan, you want your work to be as accurate as possible, don't you?" At that point, I'm saying, "Oh my God, what happened?" And then he said, "Do you recognize this document?" And he put a document in front of me, and it was a copy of the page from the public employees retirement system with the retirement factors. There are probably 100 numbers on the page. And we had the age 65 retirement factor in the age 65 calculations. All of that was correct. But then he said, "Isn't it true that you used absolutely a wrong retirement factor?" And I looked at it, and then I opened my file and I realized we used the age 65 factor for the age 60 calculations. And we use the age 65 factor for the age 55 calculations. I don't know how that got through these documents. The analysis was reviewed so many times, but it did. What it did. We're human. I know that's hard to believe. Well, when I saw that, I said, Michael, now is when 30 years of experience has to kick into play. So I just looked up and I looked at opposing counsel and I said, I've got to check something here. I said it kind of loudly. And then I went back and I took my phone out. I took out my phone, went to the calculator, recalculated all the age 55 and all the age 60 numbers by hand. And I checked it and rechecked it. And there's dead silence in the courtroom. And opposing counsel was trying to move on to something else. And my retaining counsel was saying, Mr. Kaplan said that he had to check something here. Let him finish checking. Anyway, when I was done, I looked up and I said, counsel, you're absolutely right that there was a more appropriate factor to be used at age 55 and age 60. And using the appropriate factor at age 60, this is what the damages, this is what the loss of earnings and benefits to the plaintiff are. And using the correct factor for age 55, this is what the number calculates to. And then I turned to the jury. I said, ladies and gentlemen of the jury, please forgive me for being human. And then I looked forward and I shut up.
Were you forgiven?
I was forgiven. After when this was over at the break, my retaining counsel said to me, he said, Michael, I thought that when that question came across the plate, I thought your whole testimony was going to unravel. He said, I've never, ever in my professional career seen anyone recover so quickly. You know, I knew when I got that question and when I knew what was going on, I knew I did not have the option to let it unravel. And I knew I had an opportunity to fix it and even, gain some ground in repairing it. By the way, these are professional race car drivers. Do not try this at home. I mean, you've got to, it takes a lot of years of experience to understand and have a sense of the dynamics in the courtroom and who's going to do what and who's not going to do what. And I felt that I had the judge on my side when this happened. So, I never want that. I never want to go through that ever again. I haven't.
Once is enough.
Yeah, that's right.
Good. Awesome. Thank you. Thank you, Michael. Thank you, Judge Platt, Judge Yates, and Judge Driscoll. This is a conversation because we live in this all the time, and there's always that dance between the data, between our opinions and the courts and what we do. And like I said at the beginning, the knowledge and the wisdom that you all give to us is invaluable.
Thank you so much.
Thank you for being with us today.
Take care.
Bye-bye, judges and Kaplan. And now we are going to go over with Ken Pummel. He is going to be discussing the standard board updates. So I'm going to leave Ken. Let me see if he's here. Hi, Ken. How are you?
Hi, Alina. I'm doing great. How are you?
I'm doing amazingly well. That's how Michael would say, Michael Kaplan. So
that's a tough act to follow. That was a very good exchange, and especially Michael's. I try to sit there and think, what if that would have happened to me? How would I have handled it? And I don't think I would have handled it nearly as well as he did. That's
so
for
elegant,
sure.
Right?
Yeah.
That's great having you today, and you're going to be amazing. So you can take it over with the standard updates.
Okay. Well, I'm going to find my slides. Hopefully we can see those.
Yes, but it's not in the presenter. You need to put it on presenters view. See if you can. If you're not, you can use it that way. Mhm.
Well,
You can
I'm
go
going.
over with that one. It's okay. No
Okay,
worries.
thank you. Well, hello everyone. I'm Kent Pummel. I'm a shareholder with the firm Clark Schaefer Hackett. We operate mainly in Ohio. We do have an office in Michigan and then across the border from Cincinnati and Northern Kentucky. I am a recent member of the standards board, and so it's been a very interesting time. I started in June, and we've been covering quite a few things. I'm going to try to hit a few of those. A couple of the things I believe were on the agenda and probably discussed previously. Don't know how much time I'll spend on those, but again, just want to give a little bit of what's happening with the standards board right now. The the one thing that we, and again, since I'm new to the standards board, I believe this to be accurate. And what we do every year is we try to see what's happening with the other standards, and see. We do a comparison chart. Hopefully, everyone's familiar with that. It's on the website under the association for professional standards, and then if you go there, you'll see that there's a comparison chart. And what we try to do is see what's happening with the domestic standards, which would be USPAP, and then the AICPA valuation standards. And then we also look at the international standards, IVSC, RICS, and CBV. And we go through, I was, I guess, fortunate. I chose to do the update on the chart for AICPA, for the AICPA standards. And as luck would have it for me, there weren't any changes to the AICPA standards. So that was lucky for me. But there were some updates as far as the other standards go. So I did check the website. It looks like we haven't posted, and I know we're probably getting close to the finish line as far as updating those standards. So just, I would say, kind of stay tuned with those. I think if I remember, IVSC had maybe some changes as far as where some of the standards were. They kind of moved some stuff around, and I know there were some changes with RICS as well. So we're in the process of updating those. I think it's good, again, to get a feel and an idea for what some of the other organizations, how they view the standards, if they think there's something that's changing in the community that needs to be updated. So they work through that, and everyone is independent. I served previously with the AICPA, and I did reach out to my contact as far as their standards, and I think they are going to. This is what my contact said, is that they're going through the process to potentially update those. So I guess it's possible if I'm chosen to do that update next year for the chart, that there'll be some changes. But again, it's just good to see what's kind of out there for each one of those organizations, how it might impact our standards if we feel like there's something that needs to be changed as far as our professional standards go. Then obviously we'll look into that and make those changes accordingly. The other thing, and again, I looking through the materials, I did see that this was discussed. It makes sense that these two exposure drafts came out, and as you would guess, most of the professional boards with NACVA were involved in try to determine to review these and then get comments back to the Appraisal Foundation. It was a very quick turnaround with both of these. I believe they came out and then the responses were due. I think I have this. I think the first was February 2nd and the other was February 3rd. These were released. The first was January 5th. So, and I believe the other one was late December. So not a lot of time as far as NACFA, the standards board and the executive board and others to go through. But we did work through and came up in association with the other leadership and the EAB to come up with a response to these exposure drafts that came out. And so the question is, I think that's valid for all the members is, how does this impact us? This is where I'll do an editorial. The one exposure draft in particular almost made it seem like that USPAP was really the maybe the best that in probably not intentionally, but maybe a slight for the other standard setting boards. And as you can imagine, that we would feel that our standards are just as strong as any other organization. Our membership are made up of professionals that are going to follow the standards, and they're going to produce a product that is sufficient and is going to work. So that was one that when that exposure draft came out, you read it, and it sort of did seem like a commercial for USPAP. And well, I guess if you put yourself in their shoes, right, they're maybe trying to protect themselves and talk about their credibility. But I think there's also credibility with our organization, our standards, and our membership that we do a great job. We have great members who follow standards and have quality product and service clients to the best of their abilities every day, all day. But really, those two kind of hit. It was very interesting, again, as a new standards board member, just understanding how that works, the process. You see these, and again, I know there were other professional organizations that issued responses to these exposure drafts too, but it was just very interesting to see how we work together, how quickly we got to a consensus of a response. And I guess literally the responses were due last week, so I guess stay tuned to see what happens as far as what the next steps from these exposure drafts would be. And that is really all I had. Maybe it's just my being the new guy on the block, but it's been a very interesting. And again, with the exposure drafts, that was very unique and interesting too. Just working through that, and especially in the amount of time that we had to issue a response to those.
Wonderful. Thank you, Kent. It's always helpful to stay on top of the standards and the things that can keep us out of trouble and get us in trouble if we're not careful. So
thank you.
I appreciate it. Awesome. So now we're gonna move to our final segment of this month's program with Ed Mofrat. Ed's going to be spending time with Gregory Clark, and I hope I get this right, Sarah. Sarah, is it Griefenberger?
If you're close enough, Greifenberger.
Greifenberger, all right. Talking about if you're launching your own valuation practice, 25 do's and don'ts for going solo. So welcome, Ed, and I'll let you take it from there. And I'm looking forward to this one.
Thank you, Mel. I see that as you normally do, you've saved the best for the last. So here we are with Sarah and Greg. It's always a pleasure to be working with them. Sarah, you said it, Mel. Griffenberger is the managing director of Arbor Valuation in Ann Arbor, Michigan, the beautiful, gorgeous state where I had the pleasure of living in for 2 years. And Greg Clark is a managing member of the GMC and Company based in Valparaiso in Indiana, the state where the Hoosiers come from. So again, it gives me pleasure to be with both of you again today. Let's start with Sarah, since ladies always come first. Sarah, what inspired you to create this presentation on launching your own valuation practice for those of us who are young or new enough to be, needing this advice, please?
Yeah, well, I covered the new part, not so much the young part, but so I had gotten my CVA many years ago and kind of maintained it, but wasn't really doing anything with it. Prior to becoming a CVA, I had a whole life in the corporate world. And so that's how I got into valuation in the first place. So in 2019, we moved our family back to where I'm from, Ann Arbor, Michigan, and I decided at that time to launch my own practice. So I was I felt like an island, honestly. I was trying to make my way running this business, and I felt very confident about my ability to do the analytical work of valuation, but I didn't really know the first thing about how to run my own practice. And, in particularly, I came from the big corporate world. I really hadn't, been an entrepreneur before. And so I started this little list, and I kept this list going in my desk drawer. Every time I came across something that was a tip that I thought that I would give to somebody who might need a tip on doing this, I wrote it down. And the list got really long after a while. And so I kind of came up with this idea of doing the 25 do's and don'ts. But I decided that I shouldn't do it alone, because I have a very unique practice. Unlike many of the other folks on here who've been interviewing the judges and so on, I do not want to work in the world of litigation. And I made that very clear to myself right from the get-go. So I felt that I really needed to have a co-presenter who works largely in litigation, because there are some nuances and differences in how we run our practices. And so Greg was a good sport to jump on board and help me with this presentation. And we had met because we're both on the case grading committee for NACVA. So that's how this all came about.
Beautiful. Greg, I haven't gotten to you yet. How are you?
I'm well, thank you, Ed. How are you?
Awesome. Now, I personally know some young, bright, and I do mean bright, evaluators who are working for firms making six figures, and they're prospering. They're getting star after their names. Do you feel it's worth for somebody like that to go solo? What are the pros and cons, if you will?
Sure. So, going solo is a unique proposition, obviously, in business valuation, because there are many ways to do what we do in terms of our work, whether working with a team or going on your own. I think that was part of as Sarah and I worked through preparing this presentation, was trying to come up with all the ideas of, okay, well, how did we start our practices and why, and kind of what were some of those unique caveats that drew us to that. But one thing I can tell you I've really enjoyed in being able to be on my own is really developing a network of people like Sarah, who I can go and communicate with and ask questions to, and we can kind of have that shared experience. It kind of changed the conversation with clients as you work through that process of, many times we're working with the business owners. And so when you're running your own practice yourself, you're able to share in some of those conversations and stories as far as that goes. And it changes the perception for that. As well as, there are many different theories, thoughts on certain issues. So when we go on our own, our solo practices, you really got to be able to say, this is the way I believe something should be done, and kind of can make those choices, where sometimes when you work for a larger firm, many of those choices may be made, for you. So I really think there's a lot of benefit to it.
And you feel that the long run benefits outweigh any short run pains that a new entrepreneur might go through, right?
Yeah, I think, it's a process of figuring out how you want to do the work, whether you're going to bring in a staff and kind of help build up behind you, or you want to continue to do the work by yourself. I know, many of my litigation cases, by doing the work all myself, it makes me more prepared to be on the stand and testify.
Sarah, avail us of your vast, illustrious experience, please. Give us some do's and don'ts for somebody who's starting their own practice.
Well, I think to me, the most important thing is you have to define your practice, because you're going to get all sorts of calls. And I did initially. And, you're going to kind of go, and your initial reaction is you want to take every job that comes in, right? You're trying to grow the business. So it's important to kind of get to a point where you say, this is what I want to do, and this is what I don't want to do. And I've just found there's enough work out there that even by saying I don't want to do litigation, and it doesn't sort of stop the flow of work coming in. There's plenty of it. So defining your practice, I think, is really important. And we have this whole list of all these do's and don'ts. But to me, probably the most important thing is to just be objective. Absolutely objective. And one of the things I love is that, I love walking in, and I might have two owners that I'm working with. One's hired me to do evaluation, and the other one is thinking about going and getting their own person. And I walk in, I'm like, no. I want to interview both of you at the same time. And I may come up with a number that the guy who hired me wants to throw up on. That's what it is. It's objective. I let the facts lead me where they'll go. And that to me is the most important of our entire list. And I know Greg agrees with me on this. That's it. That's like 100%. The most important thing on the list.
Yep.
And this is a question really addressed to either one of you. The comment that Sarah just made about, there's been plenty of work everywhere. I've heard that from numerous, accomplished, successful practitioners like yourselves. But for a newcomer, they're often finding it hard to find the work. Where do you go to find these, some of these many, demands available?
Yeah, and I would say that, Sarah covered this a lot in our presentation. A lot of it really does come down to kind of the marketing and the networking truly that we do, getting out there in your valuation tends to, depending on the type of work you do, especially tends to be somewhat local too. So I know a lot of my divorce work and things like that are right here within my local market because I'm here and I'm present. So getting out there and really developing that network of peers and of referral sources, whether those are attorneys, CPA firms, or anything like that, that's really where you're going to start picking that up. And then, the age-old tried and true, do really good work. I mean, that is our best selling thing. That is actually our reports are the only thing we leave behind within our work. So doing that work really well and trying to help present that in a way that kind of can lead to that next process or that next referral is a good thing to do as well.
I see. Do you, a lot of, like Sarah just, touched upon, a lot of the people, newcomers, newbies, take on anything and everything they can get. But how do you decide which are the, more narrower niches to focus on? I mean, is that do you take on some, do you consider some personal likes, dislikes about, taking on divorce or the bankruptcy or this or that? How do you decide what to niche on? And this is for either one of you.
Yeah. I mean, for me, it was a personal decision. I did not, this is really a third career for me. My first being corporate. Second, I was a stay-at-home mom for many years. And then I launched this business. And so I've formed my practice around the things that I really like doing. So I really like helping business owners figure out how the heck they're going to get out of their businesses. Baby boomers who are 70 years old, don't have any idea what their business is worth. So that's a big area of focus for me. And that leads to a lot of, that could be one owner buying another out, or it could be getting somebody ready to go to market to sale. I also do gift and estate work, but I just decided I do not want to be in a courtroom. I don't want to be involved in people's disputes. And so I just made a conscious decision not to. And, when people call me for that, I chat with them and then I refer to them to some nice other NACFA members in my area.
That's amazing that you have the, confidence to do that, to actually refer work out to somebody else. It really is good to see somebody so accomplished as you are. Give us some anecdotes or some examples of the tricky valuations that you got and how you navigated your way, through it or around it.
I know for me, because I do a lot of litigation work, I do get some really unique cases and some interesting, case or facts and circumstances and things like that. I know we've already talked about today on the AVW, personal goodwill and kind of where that starts to play into it and kind of how you start to move in and out of those. And it really comes down to, Sarah and I have talked about this many times, the storytelling we do in our reports and really making sure we go and we get all of the facts in a case. I know I saw a question from one of the people here asking about what about being objective and how do you handle that bad news, which kind of fits right into that point that you're asking about, Ed. And I think, our objectivity is a requirement under our professional standards. So, even when it's not good news or it's not in somebody's favor, I think the uniqueness of what we do is really starting to take the numbers, take the facts and take the circumstances and walk people through how, cash flow, risk, and growth are affecting how you're getting to a value and what story that is telling. And oftentimes that's both our greatest strength and weakness, right? Because it's usually the hard part of what we do, but that's also the greatest value we can bring is walking people through that and getting them to an understanding. And that's what we do in the courtroom. And I know that's what Sarah does in helping people to sell their businesses too.
Awesome. Speaking of Sarah, can you discuss the importance of creating and expanding your footprint, your digital footprint, if you will, for valuation practice?
Oh, absolutely. Because I think for the solo practitioner, the digital footprint is, we live in a great era. To be a solo practitioner and you look at all the things that you can do online without even spending much money, and it can really help boost your business. And I can give you a funny anecdote. When I first launched, I'm an MBA graduate from the University of Michigan, and they give you kind of free counsel. And so I thought, oh, okay, I'm going to take advantage of the free counsel. So I went to this woman and I said, here, I've created this LinkedIn profile. And I said, and I have 50 connections. And she looked at me, she goes, okay, I'm going to look at your profile, but I don't want you to come back to me until you have 300. And then we're going to talk about the importance of connections. And so I really took her words to heart. And I made a point of getting out, meeting the people that I needed to meet physically in the Detroit area to get that referral thing going. But then you've got to supplement it with the digital footprint. And it's just a wonderful way to get content out. If you give a speech or you're on a panel, broadcast that you're doing it, put links to it, all of that type of stuff. And you have to have a LinkedIn profile and a website that really speak to your expertise, because that is the first thing that any potential client is going to look at before they even talk to you. So it's super important.
Now, I want to take us back to the question of marketing once again. Greg, let's go to you. Do you recommend actually advertising in some publication? Let's say if you do decide to have a niche for a certain group, do you go to that target group's favorite publications and advertise, or do you consider that a waste of money?
Well, I think it can be beneficial. I know there are a lot of groups that have done that. I know that I've looked into it personally for myself, but I have found, really being present with my market, especially because I do so much in the way of litigation, going out and meeting, being at the local bar events or CPA events or networking events have really been the greatest bang for the buck. I do know plenty of people who do advertise in those regularly. I find personally being able to write an article, because oftentimes those places where you're trying to publish are actually always looking for somebody to write something, and being able to publish and show your knowledge in whatever market or whatever magazine you may be looking for may be a better use of your time and play from that part of it.
I see. I'm getting messages that you got a couple of minutes left, and we do. So, Sarah, if you were to summarize everything, your point, your guideline in a few sentences, what would you say?
Oh gosh, be confident, because you will go through periods of time where you might have imposter syndrome or something like that. Just stay confident, believe in your work, and do good work. Really put the time into the analysis and do good client interaction work too. You have no idea how many times I get a job because I'm the only person that called the person back. Unbelievable, right? So really good client interaction as well.
And Greg, to you.
Yeah, I think doing good work, as she said, is massively important. But I think spending a few minutes of time with your product and making sure that really you're delivering a report and a product that's best in class and helps to sell even what you've done after you've left them and left them with that impression is really truly important.
Okay, again, Sarah is in Michigan, Greg is in Indiana, and I'm in California. I'm in CPA, CVA, running my own practice this is our 3rd-year anniversary. So ask us how the three of us found each other. That's a good question.
Right.
Awesome.
Thank
you.
Thank you, Sarah. Thank you, Greg.
Thank you.
Awesome. All right, everyone. We're ready to close this one out. Next month, March 16th, we will be doing our next AVW. Same time, same. If you want continuing education, reach out to NACVA and make sure that you're registered for it. If you want to become a guest on one of the webcasts, email Chinda at NACVA. All the information is on the screen here, and I look forward to seeing you all in a month's time. All right, see you soon.